Joining me now with her 5 top picks is Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. Victoria, great to have you on.
It's a pleasure to be here.
All right, so let's get right into it with your picks. First up is a healthcare play, Gilead. The stock has been working up 15% year to date. Tell us why you like this one.
Yeah, so we know that healthcare is a sector right now that has had some pullbacks. It's still in an uptrend, but we think it's an opportunity to be able to go into some of these names. And Gilead is one of our favorites for a few reasons. From a fundamental perspective, we like it. I mean, you're looking at gross margins of about 80%. You have return on equity of about 40%. But what we really like is how they've extended their pipeline. They've really had that grow from just being the HIV leader, which we know they are, but also to oncology, to liver disease, and they're looking at coming up with longer acting treatments for people, which we think can be key to the HIV community. And so we really think it's a good company, along with what they do in the community itself. They do a lot of work to help people, and so all of that together, we think it's a really strong pick, and valuations are better than where you would see Merck or Lilly.
Okay, and speaking of a sector that's been under pressure, tech, and your tech pick here is Apple, down about 7% year to date. It's a name we talk quite often about on the street. Tell us why you like Apple at these levels.
We really see Apple as a long-term holding in the portfolio. So it's not a cheap stock, Caroline. I mean, it's 29 times, right? But you're also getting a return on equity of about 150%. And what I like is that you're starting to see them come up with some new lines of products that are in that lower price range. So they have the opportunity now to bring in a new cohort of consumer that perhaps would not have purchased their products before. And we know that usually once you're an Apple customer, you are sucked into that universe, right? And you are there for a long time. And so the potential over time we think is really strong here. So it's a long-term holding in the portfolio.
I'm curious because Apple, as you look at the Mag 7 and their year-to-date performance, Apple's sort of in the middle, but all are lower. Would you buy all of the Mag 7 at these levels, or are there some that you would avoid?
No, I wouldn't buy all. When you look at Meta, I think there's some other elements going on there that I would be a little bit more cautious around. Obviously, if you're going to look 10, 15 years out, I'm sure all of these stocks will be much higher at that point in time. But if you're looking a little bit more recent, looking over the next couple of years, I think Meta is going to have some continued struggles. There's a lot of capex for these companies, and it's causing some distress in some of their stock prices. And that's the one thing about Apple, is they're not actually putting all of that capex towards AI growth right now. They're actually just benefiting from what other people are doing, which is helping their strong cash flow.
Citi is your next pick. Financials, of course, another beaten down sector. Why Citi over other banks? Is it Citi specific, or are you a buyer of big bank weakness in general?
We do like big banks in general, but Citi kind of sits in a unique spot too. When you look at the valuations on Citi, you're 1 times price to book. You look at that PEG ratio, which is how much you're paying for the growth, and it's less than half. It's at 0.4. So you're really getting like a good value for what you're putting in and for the growth expectations. And you look at revenue growth related to fees, related to the market component of their business, and they're guiding like mid-teens for that growth. So I think you're getting a good name. We know that fundamentals are good for these banks. When you're looking at the reserves, when you're looking at their capital requirements, when you're looking at their cash flows, they're in a good position. So having that lower valuation than a lot of the other banks helps us to like Citi a little bit better, but we do like them across the board.
Some of the regionals have been outperforming the bigger banks so far in 2026. Do you like regional banks at all, Victoria?
We do like regional banks, and I think part of the reason you're seeing them outperform is they're not getting hit quite as hard with some of the concerns around private credit, although we don't see a systemic risk from private credit kind of going from the out of the bank networks into the banking system. We don't see it flowing in, so we don't think that the larger banks will get hit with that on a long-term basis. But on the short term, they have been. Regionals are not facing that to the same level, so they've been performing well. And again, they have good balance sheets and they're doing well. So regionals is a good spot to put your money to work as well.
Would you buy some alt lenders, some private credit firms?
I would not do that. We don't think it's systemic, but I also don't think you need to take on that risk and put that exposure in your portfolio unnecessarily. I think there's more to come in that private credit space. I just don't think that that exposure goes directly to the larger banks. So if you want to play financials, banks is probably a better way to do that.
Okay, let's get back to your top five here. Sticking with financials on the fintech side, PayPal. The name is down about 20% year to date. The 1 year chart looks even worse, down about 35%. Why are you a believer in PayPal, and what is the market missing here?
Yeah, so this is a name that we want to watch right now. We're not saying jump in with both feet. Watch this name. As you mentioned, they are down over 20% year to date, and there's been a lot of concern around PayPal. There was the rumors of acquisitions that were going on. We think you can have a really strong turnaround story here if management can execute properly. And there's two avenues really that we see PayPal growing. One is that agentic, that AI commerce component. PayPal is really in a good spot that if they take hold and get in early and start growing that component, then I think they can really be leaders in that space and take a lot of that market share. That's a really strong opportunity for them if they execute well. And you've also seen PayPal extend up to 70 countries now with the stable coin. So it allows people to hold, put their holdings in US dollar backed. The PYUSD is the stable coin. And people in other countries where there's volatile local currencies don't have to move their funds in and out of those currencies. They can hold them with US dollar backed issues. And so I think this is going to be a huge benefit for PayPal going forward. People will be more likely to use them not just as holdings, but then use them in their transactions as well. So not that it's a great stock right this moment, but we think there's great opportunity here if they can pull it off. So watch this one.
A wait and see for PayPal. What is the headline or the metric or the move that you're really waiting for to decide if you're going to buy?
Yeah, we just want to see the fundamentals start to turn, right? We don't have to see them achieve all of these goals before we jump in, but we also don't want to jump in without any clue that they're really on the right path to do these. So we want to continue to hear what management is saying in regards to these two elements that we talked about. If they're making large strides, especially in the commerce component, that agentic AI commerce component, then that's probably the chance that we would take there and jump in and hopefully have that upside potential.
Okay, and finally, Johnson Controls is your fifth pick here. JCI. What's the opportunity here?
Yeah, so if everyone wants to see how they play AI outside of the hyperscalers, right? And Johnson Controls is a great way to do that. At their last earnings call in February, their orders were up on an annual basis over 56%. Their backlog was up over 20% because of all of the data center construction that is going on. And we know that Johnson Controls, they're in the engineering, the manufacturing, the servicing, and also retrofitting for older buildings that want to be more efficient. And so as the AI and the data center and all of the build out that comes along with that needs to be energy efficient, that plays right into JCI's wheelhouse. And the fact that they are also moving more to servicing, once they actually install, once they get the buildings up and running, they all are also now taking on the servicing of those components. That's really helping build their cash flow. So we think this is a good way to do the AI play outside of just hyperscalers.
I'm curious about your overall market view, Victoria. Are you constructive on this market right now, or are you cautious? If you're still buying, you can't be bearish, right? But which camp are you in, given all of the volatility and all of the uncertainty that this market is up against?
Yeah, we're actually labeling this year right now as a high-risk bull market. That's kind of what our CIO, Bob Dahl, has been calling this, because we do think there are elements of this bull market. You still have strong earnings. You're not seeing the unemployment move at the pace that a lot of people anticipated. Yes, the labor market is weaker, that no hire, no fire, but not tons of layoffs going across the board. So you actually think before the strike started in Iran, the consumer was holding up a little bit. Things were doing okay. So there's that momentum for a bull market and to put money to work. But there are a lot of uncertainties. There are a lot of red flags that are out there where you need to be cautious. So yes, invest. We think there's room to run here, but I think you do have to be critical in the areas that you're actually putting that money to work. For us, it's those sectors we talked about where we're seeing them come back or pull down, but they are still in an uptrend. So financials, healthcare, industrials, these are areas where we would work in this high risk bull market.
Does that also mean that you think that the rotation that we've been seeing into other areas of the market away from financials and tech, areas like industrial, or well, I guess Johnson Controls would be industrials, but areas like staples and energy, do you think that that rotation will be short-lived then?
Well, I think when you're looking at Staples, Staples got overbought really quickly when there was some concern. So we don't want to chase those valuations there in Staples. And you look at something especially like packaged foods that many people consider staples, and they've been doing horribly. General Mills did not have good earnings come out. And so I would be a little concerned with Staples. I wouldn't go there. Energy, we're invested in energy. Our home office is here in Houston. We like that sector. But again, I think you have gotten to such high levels. You've had Exxon and Chevron hit all-time highs. I would actually use the energy names as a source of funds and trim some of those names. Don't sell them out of your portfolio because there could still be more upside. They were doing well even before the turmoil in the Middle East. And so I think there's some room there. But they're at such high levels, trim those names and use those as sources of funds for some of those other areas of the market. And that's another reason, Caroline, that we think you kind of have this bull market going on, because investors aren't going to cash. They're just rotating within the market to other areas, which is quite supportive.
Just finally, what kind of returns can we expect to see in a high-risk bull market?
Yeah, we're not going to see returns like we've seen the last few years, at least not in our opinion. You're going to have some muted returns. It is a midterm election year. You typically have a significant pull down around the middle of the year, and then the market starts to come back. So we're looking at mid to high single-digit returns for this year. At least that's our expectation. We'd be pleased to see it higher, but we want to set expectations with our clients, and that's where we're talking to them about what we expect to see.
All right, we'll leave it there. Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. Thank you for your insights. Thank you for your picks. Really appreciate it.
My pleasure. Thanks so much.